Hello everyone, welcome to the market snapshot for today. So, what are markets telling us? I think, in my perspective, markets are very clearly telling if you are willing to put extra effort, that is when I will reward you. I mean, most of the indexes in India are trading at its all time high, like the Nifty micro cap, small cap, the IPO index, Nifty 500. Nifty 200 is nearing its top, and Nifty 50 still needs to do a lot of work. And same is the case with the US markets, wherein I think they all are trading at their almost all time high levels. And still, I think I'm sure many of you would be struggling to make money. The reason being, the markets are very volatile. The strength lies in certain pockets. And if at all, you are not scouting enough, most probably you would be struggling. So let's look at the numbers. Nifty 50 at 24,252. In literal terms, no movements there. Nifty 500 23,530, no movements there. Nasdaq 129,308, the only positive trying to sustain 50 MA. S&P 500 7674, almost touching 0.5% yesterday. So this is Nifty 500, advances of 198 to declines of 302. Again, the momentum is not coming to the markets. The reason is very simple. The strength lies with very certain or minimum pockets in the market. It is not that it is a very good healthy bull run wherein everything is, every breakout is working, every pullback is working. That's not how the market is. I think uh, market is rewarding only strengths. I mean, and that too while you are scouting enough. So new highs, again no changes here, to 9 new highs to 491 new lows, and the breadth too isn't looking great at 2 231 stocks above 20 EMA, 252 stocks above 50 EMA, and 292 stocks above 200 EMA. And this is, I mean, this is the strongest story, which tells where the markets are headed, and somehow the momentum is not coming to the markets. And the fight between FIIs and DIIs keep happening, although DIIs have been buying a lot, but somehow, and FIIs have been selling, not selling much, but have been selling consistently. That becomes a major problem, I guess. We had gained certain momentum because of the falling dollar, but the problem is rupee in itself is depreciating too much. So even if in literal terms when dollar falls, that also doesn't helps much. So overall, what I would say about the Indian markets is look for stronger sectors, which maybe government of India talks about, core hard assets. I think a lot of people are have been of this opinion that micro caps and small caps will do well while this time the Indian markets improve. But honestly, if rupee keeps depreciating and dollar keeps rising, DIFIs keep selling, I don't see that happening. I think a major chunk of money would lie where, the thematic or sectoral themes where Indian government would be interested. So maybe looking into those pockets would be, and now broadly, what could be those sectors is, see, for Indian government, infra is a major push, energy is a major push, electrification is a major push, power is a major push. Maybe looking into these sectors can help you. But if you're looking to trade broadly, maybe basis indexes, the struggle might continue. So this is the chart at Nifty 50. Like I said, really not much momentum. I won't be surprised if it goes down again below 50 EMA, because somehow the strength is not coming here, and I don't see any reason that strength will come in near time. This is Nifty 500, looks better, but then again the strength is not coming, and the reason is very simple. Very small pocket of stocks, are driving this index, and that is the reason, even if the sort of momentum happens, it doesn't sustain, it just keeps falling back. So the story is same. Look for sectoral or thematic bets. So overall sentiment from the Indian market is Nifty 50 is bullish because trading above 50 MA. Participation is mixed and breadth is weak, and Nifty 500 same story, bullish. Participation is weak and breadth is mixed. So there, I mean, if you see broadly what is happening, the participation and breadth is playing between mixed and weak and mixed. It would have been healthier if this was happening between mixed and and strong, but somehow that is not what is happening. And like I have been saying, see, if you are a new entrant, mostly look for conservative bet sizes, because if you remain too infatuated with the fact that a lot of people are making money posting it on Twitter and you too have a chance, for sure you have a chance, but then the thing is the markets are not in a complete bull run. There are strengths, but they lie in very definite pockets, and if at all you can scout them, that'll be healthy. Or else I would say keep your position sizes to maybe 40-50% of exposure. That is what I would say. This is US markets, S&P 500, the same story. We had advances of around 100 and today we have at 300. I have been telling this is an extremely volatile markets. If at all you can deal with volatility, that is the only time you should be dealing in with the US markets, or else you'll struggle a lot. US markets are extremely volatile at this point of time. Advances of 332 to declines of 168. New highs 19 to 481. We had new highs of 6 yesterday, so that is 3 times. And breadth here too is not improving, so this is again an alarming thing. Above 20 MA 258 stocks, above 50 MA 290 stocks, above 200 MA 349 stocks. Markets, for talking about the US markets, the markets are volatile, the breadth is not improving, and yields are rising. So honestly, overall, if you want to take my piece of advice, it'll be little cautious about the US market, because uh, these things are not in sync. I mean, I think it is just that everything is going in its own on its own, and everything is going in its own direction, so I think that would cause little problem. But at the same time, the story is very similar. Are there pockets of strength in the US market? Definitely. If you can scout them, that is where the money is. That is where. But then if you are someone who just relies completely on index based universe, maybe this the time is not very favorable to trade. Or if at all you are someone who really want to have an exposure, just stick with that 40-50% of exposure like the Indian markets have. This is the chart for Nasdaq 100. The positive, like I said, just trying to sustain 50 MA, but it is extremely volatile. Be little cautious. S&P 500, better looking chart than Nasdaq 100, but again, uh, see again, S&P would do better. That is what I perceive, and the reason is very simple. There are pockets of strength if at all you can scout them. And Russell 2000, same better looking chart, gaining much more momentum, but at this point of time I would still like to stick with I would still like to stick with the S&P 500. So how are the overall sentiments in the US market? Nasdaq is bullish, participation is strong, and breadth is mixed. S&P 500 bullish, participation is strong, breadth is mixed, and Russell 2000 bullish, participation is strong, and breadth is mixed. See, if I just look at it, it doesn't look a very bad market, and it is not a bad market, that's for sure. But then I think it's a very, very volatile market, and everyone cannot deal with volatility. Although the social media post will tell you volatility is where the money is made, and that is very, very true. But trust me, volatility is not something which everyone can deal with. It's not easy to see your portfolio 20% up today and 50% down tomorrow. That, I mean, sounds easy, but it doesn't get well when real money is at stake. So that is the reason I'm telling your exposure. I mean, you can either, if you are very new to the markets, I would say just avoid US markets. But if you are someone who understands volatility, maybe a 50% exposure at max should be good to go. The other points of concern why US markets I'm not very confident about. The yields have again risen at 4.73. Dollar is falling. That is something which is strengthening the equities in emerging markets majorly. VIX at 1513 is not indicating much. And between yesterday to today, Bitcoin has risen another 4,000 points. If at all you couldn't enter on the first day, I think Bitcoin has simply not given another opportunity. If you are a day trader, for sure you would have gotten some, but then if you're a swing to positional trader, you would not have got an opportunity. I think gold again had good opportunities on intraday basis or swing basis yesterday too. If at all you would have been looking at, I'm sure you would have captured that opportunity as well. This is the chart for dollar. It is falling. That is what is helping the emerging markets, I would say. And Bitcoin, like I said, it has not looked back. It has not given you a second chance. It has just carried on. I mean, even on intraday basis, the opportunities were limited. That is how strong Bitcoin has gone. And gold, I mean, again, a very strong looking chart gave has been giving a lot of opportunities. And the way gold is not a Bitcoin, so for sure you'll keep getting a lot of opportunities in gold. Just it should be part of your watch list, whatever time frame you use to trade, invest. Just put it in your watch list and look for opportunities in both these asset classes. So overall, if I'd say, like I have been saying, that the strength lies in certain pockets. So which are those pockets? For me, in Indian perspective, consumer durables are doing very, very well. Auto is doing very, very well. Metal is doing very, very well. So this is where primarily I would want to explore opportunities. Coming to the US markets, I think it is healthcare. I think there's a mistake of healthcare and expanded tech. And the other sector in the US is energy. I mean, that should have been the second, should have been energy, but it is healthcare. But those are the three indexes wherein you can look for opportunities. These are your sectoral bets, and I'm not saying they will 100% reward you, but they will perform better than the overall indexes, the universe you might be following. So some of the good scripts which I look forward to for coming week, in Indian perspective, it will be the Leela, Lenskart, RR Kabil, and AU Bank, PTCIL. With respect to US, it is NSA, NHPAP, PRA, TGT, THC. So these are not trade recommendations. It is just that I feel these are pockets of strength wherein you can look for opportunities basis whatever trade setup you have. And like I said, both the markets, Indian market somehow is not gaining momentum. US market is very volatile. So in both the markets, if you have been holding on to positions which are long enough, just continue holding. There are no changes there. If you are a new entrant, I guess you can literally avoid US markets. Indian markets, I think 40-50% of exposure is good enough. And there are very good opportunities in gold and Bitcoin, provided, I don't know, like those are different kind of instruments, different asset classes, futures. Are risk involved is a lot more. Only if you understand those kind of leverage instrument, that is when you should be looking at them. Or else these could be some of your high probable scripts wherein look for opportunities. As is, they will not give you opportunities. They should be part of your watch list, and basis whatever setups you have, try to get into them, and mostly they will play out. There's no assurance. Trading investment is all probability game, and that is how we should be looking at them. And that's everything from my side. I hope you all found this useful. Thank you so much, and see you next time. Have a good one.